Welcome back. You're watching Dukascopy TV and I'm Darren McDermott. I have David Perregaux in the studio with me today from Leumi Bank to have a look at equities and investment opportunities. Welcome today, David.
Welcome, Darren.
So if we begin with looking at Europe and European equities, focusing on the Eurozone. Now, it's had a pretty big recovery. Italian, Portuguese, Spanish stocks rose more than 70% since July 2012. Athens stock market had a miraculous recovery, rose by 130%. Now, despite this, there was actually slow enough numbers in terms of growth figures for the first quarter, but of course Germany had very strong figures. What are your views in general of growth, and of course, are you bullish on equities for Europe?
Yes, there is clearly massive support coming from Mario Draghi. This is the put of Mario Draghi, which is a massive support for further gains in global European indexes. This is the first point. The second point is clearly that the companies have got healthy financials, metrics, and they are looking for acquisition. So clearly the M&A market is going to be the second support, but it's not the only one. I mean, with the put of Mario Draghi, we saw Germany 10-year yield coming at 1.5. We saw also Greece 10-year yields coming at 6.5, so roughly the half of 2 or 3 years ago. The Italy are currently at 3.20 and the Spain at 3%. We can expect them to remain at this low level or even to go lower, which is clearly a strong signal that the massive support of Mario Draghi will support also the equity market in Europe. Secondly, there is a dispersion of the returns within the equity market. We see huge potential on small and mid-caps company, and also this volatility is giving opportunity to the long-short managers, giving that the low double-digit expected returns for 2014, but with a higher volatility, is clearly a signal that we are only in the middle of the potential market this year. If the investors are looking for lower volatility and this kind of returns, or even a little bit higher, long-short equity is clearly the place to be. We can also say that the spike of volatility is clearly a buy signal for investors. Most of the institutional and also the fund managers are expecting this volatility to be a signal to increase further the position on the long short or also on the long position. So I would say that for European stock picker, the current environment is clearly supportive and we are just in the middle of the potential this year.
And looking at alternative investment opportunities, now Latin America has some challenges facing it in terms of structure, in terms of growth challenges. But are there some opportunities out there for investors?
Broadly looking, it looks like a little bit under pressure, yes. But if we look at the granularity on at each country level, I would say there are a group of winner and there is a group of loser. Starting with the asset allocation, I would say that there could be very good surprise in terms of FX and also local currency debt globally in each area in Latin America. But speaking about alternative strategy, the place where we can have good returns for the 2014 years is clearly the global macro and the long-short equity. For the most liquid strategy, I would expect to have infrastructure, private equity to be clearly the biggest winner this year. But it is more niche players that are going to invest in this area. The most resilient place to put money currently is clearly Colombia. We can expect to have a GDP growth for 2014 around 5%. The government, which is going to change, I mean, there is a presidential election at the end of May and early June. If they are continuing to negotiate with the FARC, we can expect the peace process to be also very supportive for the market. But the massive support is coming from investment from the government with public-private investment to support the infrastructure of roads, airports, harbor, and also hospitals. So the country is going to pass from a a low added value to a clearly strong added value area over the next 5 to 10 years. 30 billions of US dollar are going to be invested in the next 4 years in the infrastructure. So this is clearly a massive support, meaning that if somebody wants to make an investment in Latin America currently, I will be rather in the long short area in Brazil, in the long short area in Mexico, and in long short area if in Argentina, if possible, to find somebody to is giving this kind of strategy. For somebody who wants to have something like 20 to 30% of returns annualized, it's clearly on the private equity and infrastructure in Colombia, which is the sweet spot currently and the place to be for the next 5 years.
David, thank you very much.
Thank you, Diriam.
Well, that's all we have time for right now on the show, but do stay tuned as we have plenty more heading your way. Goodbye for now.